I think that the U.S. economy is very strong. It's certainly very strong by international standards. GDP growth humming along at 2.5%, very low unemployment. I personally don't think inflation is coming down to 2% very easily, but it's under control. In that context, there's reason for a good amount of optimism about the new administration's attempts to reduce regulation, to smooth out the ability to do business. There's a little noise about tariffs, but hopefully that'll sort itself out as a negotiating tactic. In private equity new transactions have been below average for a few years since rates started going up in 2022. There's an increasing backlog of deals that are ready to be sold into the private equity ecosystem. And we see that increasing gradually. And I think that as we go into 2025 and 2026, this impact from improved growth, improved business environment is likely to be played out.
Okay, so what are the trends that you're seeing in private equity that give you optimism to say there will be deal flow, there will be optimism, there will be opportunities in the next 12 to 24 months?
Well, two things. I think that many private equity firms, with hindsight, would acknowledge that some of the prices they paid in 2020 and 2021 were too high. The multiples were probably a little too high, and the acceptance of EBITDA adjustments hasn't fully panned out. What does that mean? That means that in order to achieve growth targets and exit value targets, private equity firms have to hold these companies longer. And if you look at our activity as a lender, we've continued to be very active over the past couple of years, but 70 or 75% of the loans we've made have been for add-on acquisitions. So private equity firms are holding the portfolio companies longer. They're investing more money, investing more equity, investing more debt from lenders like us to grow and achieve those targets. The 2021 vintage is not going to set any records, but the skill and adaptation that private equity firms have brought to place to deal first with supply chain issues, employment limitation issues, inflation, really demonstrates how good private equity is in the U.S. economy, for the U.S. economy, and for the long term. Keep in mind that half of the new deals that get done, certainly in middle market, we focus in middle market private equity, half of the new deals that get done in middle market are companies that are originally family-owned or privately owned. There is an accumulation of a backlog of those businesses that have held off selling because the certainty of closing has been lower. If you're a company owned by a private equity firm, everybody knows eventually you're going to get sold. If you're a private company that's been held in a family for 30 years, nobody's thinking about whether it's going to get sold or not. Maybe you're going to sell it for estate planning reasons or strategic reasons. But what you don't want to do is tell the world you're thinking about selling it and then not getting it done. We're getting to a point where confidence in the economy, valuations, availability of capital is going to restart that part of the engine.
Really fascinating. And one question I always like to ask you, because you are a regular in the Middle East now and you like to show your face around here. I know there's opportunities for you in the region too. So walk me through what the business can do in middle market private credit in the Middle East, and what else brings you here this time around? What specifically is the opportunity for you in this region?
Well, I love coming to the region. I learn a lot. I enjoy interacting with high-energy, forward-looking business people. So this region is a source of capital for us, and we're extending, again, particularly in the middle market, where we're really the market leader, the opportunity for institutions and family offices to get exposure to this very high-quality, senior-secured floating rate debt that is less risky than other asset classes and provides a steady premium return. We're also very committed to the long term here.